Welcome for the Group A distributions. I have them loaded and I guess ready to go here. So Group A, I guess if we want to cover these by percent return would be what the distribution is divided by the recent ETF price. I guess we got top at roughly 6% was TSMY at 95 cents. YBIT came in almost at 5% at 54 cents. Then everything else was, I guess, OARK 4.23% or 38 cents. TSLY pretty weak, 3.83% or 30 cents, at least relative to past. Google or GUI, 3.42% at 45, and then SNOY was 46%, which is 2.8 or 46 cents, which is 2.85%. And then Exxon was 23 cents or 1.9% of the recent ETF price. A couple of updates to the website. I did add a quick macro tab just to get a brief glimpse into how the markets are doing currently. Try to grab the S&P, Dow, NASDAQ, Bitcoin 115. Let's see, it looks like NASDAQ, Dow, S&P all up for the day. I guess if we click on them, I believe clicking on them shows how they're doing. I guess you can click it for the day. Then also active stocks today, you can see active gainers and losers. Some of these applicable to the YieldMax stock, some of them not. Snap taking a pretty good hit today. AMD taking a pretty good hit. Of course, that affects the YieldMax AMDY. And then NVIDIA was just an active stock, not really necessarily gainer or loser, just pretty active. And then for the gainers, just a quick look, see if there's anything that's YieldMax related. Don't see at least among the top 5. And then I got the, I guess you would call these the charts by sector, by market cap and how they're doing. This only updates at the end of the day, so this will be showing you how the market ended yesterday. If you want to zoom in, you can use your little zoom in filter to zoom in on to see the littler or smaller squares accordingly. There's Coinbase, for example, minus 6.34% yesterday. That, of course, takes Coney down. And then in terms of crypto by market cap, Bitcoin, Ethereum up. And then here's just some common ETFs. You can see how they're doing. As far as top stories, just once again, AMD slips despite big revenue jump and solid earnings. I heard several of their metrics seem to be somewhat fabricated by one-time events, or at least that was the talk of the tape. Disney, this would of course affect DISO slides despite earnings beat. That of course would take the DISO synthetic down. But yeah, I'm not going to cover this every time. I just have a macro tab in case somebody wants to see how the markets are doing right now and judge that on their YieldMax performance. But as far as Group A, so I also did add for Group A, I got the tickers and how they're doing today. You can see a lot of them are up. We got up market, except for Exxon is down. And looks like TSMY down a bit, but everything else for the most part's up. And then I guess you can reference this to their underlying equities. GUI 0.46, Google is 0.6. See how the underlying equity is doing relative to its YieldMax fund. For the most part, they tend to line up, which makes sense since the synthetic clearly would be impacted by the underlying equity. But I guess that's enough of that. We just wanted to jump on a couple of these Group A. First, I guess I'll start with GUI. And I don't have, I guess in previous videos, as I did show, like SNOY, for example, does have the in-depth. GUI and some of these other ones, I don't have it yet. It will come in the future. Just really have to put it together and add it to the site. But for GUI, I just want to note, it looked like their recent dividend. GUI's always a pretty consistent pair, not very high, but always in like the 30-35 cent range. It was a bit higher this time at almost 45 cents. So that's probably the best since late last year. Not incredibly well, or not incredibly high from a percentage basis, but hopefully you don't got the NAV kind of volatility as some of the other ones. Price plus cumulative distribution, once again, a very standard. Although I will note, we have not had a huge gain on this one. You're only up slightly if you are a GUI ETF shareholder. SNOY, this fund's been pretty good lately. I think the distribution was a little light this time. We can see, it's probably the lightest ever, right? 45 cents. Yeah, lightest their smallest distribution to date. However, if you've owned the fund starting at 20, you've done pretty well. As you can see, you've got about a $12.59 cumulative distribution since inception date, and you got a ETF price that's about $15.96 a share. And relative to the underlying equity, we're not lagging it too high or by too much. Yeah, you can see the yellow line here is the underlying equity if you would have invested the money there. Red is if you're in YieldMax reinvesting your dividends, and blue is just YieldMax putting your distributions aside into a checking account or something that is not growing at any pace. But as far as in depth for SNOY owners, I do kind of like the SNOY fund. I think it might be doing well into the future based on its volatility makeup as well as underlying equity. But from positioning perspective, and just to note, if you want to see how up to date these charts are, go to the market cap shares and just see what the latest date is. You can see we got 8/6/2025, so it's been updated today. So this is the SNOY market cap. The fund is at that 100 million mark, going up and down, below and above it. It's not a huge fund, but as far as positioning, we got the synthetic at 200, stock price around 210. I do got the ticker down here, so you can see SNOY is in fact above 210 right now. So it's actually a little higher than the last time I updated this chart, which wasn't too long ago, where the price of the stock, of course, moves all the time. So hard to have it be 100% in line with what the stock price is currently. SNOY is at 1602, but as far as how SNOY is structured, we can see we got the 8/8/2025 contracts. We got them sold at 212.50 and 215 with the top part of the credit spread at 222.50 and 225. As far as how they're using their synthetic collateral, they have 4,488 contracts available to them via the synthetic to use as collateral to sell calls against. They're using that entire collateral. They do have that many calls sold, but they also have that many calls bought just at higher strike prices, giving them a 100% insurance perspective or percentage. As far as the makeup per share, I can see the ETF price, as I noted. It looks like it's above 16 right now, but last check-in with the update to this Tableau view, it was at 1571, so the price clearly is up today. The synthetic does have 46 cents of value in it, probably even more now. And the other contracts, or the contracts sold for the weekly income, we're holding the fund back by 7 cents a share as of right now. And then just another, if you want to see how this fund has been doing over time, I do like this illustration. And let's see. Yeah. So always make sure the all button is checked. You want to get the full history since when I started it. But you can see here is the ETF price, kind of the ETF price as it fluctuated over time. If you want to know exactly what's impacting the volatility of the ETF price, you can see their cash position is just slowly increasing from 1518 to 1516, 1531, 1531. So that's just slowly increasing from the contracts they are selling over time. So the impact from the ETF price is clearly driven by the synthetic, which is going up and down with how the underlying equity is trading. And then finally, this yellow line here, this just shows you the current value as of the date ran of what the weekly contracts usually that they have sold to generate that weekly income, what they're worth per share. So right now it was negative 7 cents. So what that means is those contracts they have sold are acting as a 7-cent drag on the fund, assuming they do not hit the strike price associated with those contracts. That negative cents will go to zero, which should therefore impact the underlying equity, causing it, or not the underlying equity, but the YieldMax fund, causing the ETF price to go up by 7 cents. That doesn't seem like a ton, but I suppose if you look at it over time, 12 cents, 11 cents, take that times a 4-week amount, and you're looking at 40, 50 cents in premium captured over that 4-week time frame. So that's how they generate that income, as well as from the synthetic, to pay out the distributions on a monthly basis. So that's SNOY. The other one I just wanted to touch on quick was TSLY. That's, of course, a widely held fund. Maybe I'll just take a look at the fund sizes quick. So YieldMax, here we go. So here's the summary spreadsheet, and then down below here we got the fund sizes. We can see TSLY here is what, number 1.16 billion versus 1.2 billion for Coney, so it's the fourth largest fund. So I guess that's the reason, I guess from my perspective, to touch on it quick in case people are interested in how it's doing. First thing to note, distribution per share, lowest ever, has been on a pace lower for a while. As the ETF price, of course, comes down, the distribution's been coming down. Maybe an interesting chart, maybe for the future, would not just be the distribution per share, but the distribution percentage. So what the distribution is based on what the ETF price was. Because clearly as the ETF price goes down, the distribution cannot be as large, as there's not as much collateral there or material there to really generate income against to a large degree. So as that goes down, I guess you'd expect the distribution to go down, but it'd be interesting to see what the payout percentage is based on what the recent ETF price was, see how that's trending. I assume that's basically tracking the implied volatility, which that may be a decent chart to have as well into the future, as implied volatility is a direct impact in what the distributions are from a percentage basis. For shareholders in TSLY, obviously the share price has gone down quite a bit. With the reverse split, you can assume it started at 40 and is down to $7 and change. That said, you have gotten a $34.26 cumulative dividend. So not good, but we're not down. I guess we're down relative in opportunity cost to what we could have had not owning TSLY. But yeah, TSLY has not been a very good fund. They have generated options premium, but the ability to judge when to write calls and judging the synthetic has not really been done in a very good manner, I would say. That said, the TSLY price is all over the place. Hard to predict, but yeah, this one has not been the best one thus far. But I guess for those who are new and owning it, I guess you don't really care about that. You just care about how it's going to go into the future. So I just wanted to get a positioning on this. Maybe I'll, not entirely sure why that's not loading. Give it another refresh. There we go. So TSLY, let's see, right now they're trading at about 320, or TSLA, the underlying, is trading at 320. So the black line's almost right. It's up a little bit. So you can see actually they wrote a lot of contracts that we've already been capped on our upside. So TSLA, the stock, moving up even more. We may not see TSLY, the underlying equity, increase at the same rate. Yeah, I guess you can see this already. You got TSLA, the stock, up 3.64%, but the TSLY is only up 2.21%. Clearly that's because we're being capped on some of these calls that we've sold. And if it keeps moving up, TSLY, the ETF, will move up still until we get capped here at 325. But if TSLA, the underlying stock continues to roll, we'll start capturing the upside again once we hit the kind of the top range of our credit spreads at 330 and then all the way up to 345. As far as their synthetic, so 36,158 contracts available, using them all. We got 0 remaining. We do got an insurance on about 82% of the portfolio, or the portfolio of calls that we've sold. So 29,708 contracts have been bought on the upside in case TSLA does go on a large run. Fund makeup per share, and I'll show this as a time series as well down below. But ETF price 767. We do got that synthetic positive value. You can always tell if the synthetic's positive or not if you look at the positioning. They got synthetics structured at 290 and 295, and the current price is above there. So clearly, if the current price is greater than the synthetic, you're going to have a positive synthetic value. The larger that gap, the larger the synthetic value will be. And then the other contracts right now are acting as a negative 5-cent drag on the fund overall, 5 cents per share. As far as the fund holdings versus time, we can see the TSLY has been declining over time. That's been driven primarily by the synthetic going down. Cash value continues to go up. That said, if you watch this one as well as Snowflake or Snowy, as well as any of the other ones as I get them, once the dividend or distribution is paid, you will see this cash amount go down to reflect the cash coming from the ETF going to you as the investor. That will also cause the ETF price to go down, since the ETF price is simply the cash plus the synthetic plus the other contract values, those three components added together. So you will be able to see that real time with this time series chart. And then here I'm just capturing really the fund TSLY and what its components are at the moment. So you can see as far as 8/6/2025, you got a 94.73% cash, the synthetics 5.92%, and the other contracts are acting as negative 6.5%. Drag on the fund. Clearly, the more negative the other contract percentage is, it will push the synthetic plus the cash percent to be over 100, since those three added together will equal 100. So if one's negative, they'll push the other two to be positive over the 100 threshold. Let's see. I don't know if there's any others worthy of covering. I think, was it TSMY that had the best? Perhaps I'll just look again. I believe it was TSMY that had the best percentage payout. Yeah, it was TSMY, was almost 6%. So that was definitely pretty good. If we look at TSMY, distribution per share, I just want to see how that was trending. Yeah, it was pretty, the 95 cents was the high of the since the fund inception. So fund's inception. So that was a good return. As far as how the fund's been doing, price plus cumulative distribution, started out at 20, we're currently over the 24, so it keeps moving steadily higher. ETF price has lost almost $4, but the cumulative distribution of $8.27 has made up for it. And I think that is about what I want to cover today. If you're interested in any of the other YBIT, OARK, XOMO, feel free to come into the website. I'll attach the link below the video and come check them out. I'll add some more details as I can. I do think OARK is an interesting fund going forward, given the volatility of the ARK Innovation Fund. But as far as how the fund's been doing, you're up a little bit since fund inception, mostly driven by the cumulative dividend, as the NAV erosion has taken it from $20 down to about $9 a share. But with time, and maybe with some increase in the underlying equity and maybe some enhanced volatility, this one can be a really good performer. With time will tell. But yeah, I guess thanks for tuning in today. Enjoy your week.